So everyone put it in the chat. What is your understanding of SMT or Silver Bullet 1 through 10? Like 10, I fully understand what it is. 1, I've never even heard of it. Seven, 8, SMT 3, Silver Bullet 8. Cool. So I'll show you a pretty easy SMT setup. And it's a strong setup, but you have to remember that it's like any other setup. There's going to be wins, there's going to be losses. But as long as you follow the trades appropriately, then you should have some sort of advantage in the market. So right here, Monday, you can see London makes that high. 2. London makes that high, and this is in US 30, Dow Jones. But in NASDAQ right here, what's going on? So if we put those side by side, you see the difference, right? What's going on at this time, right at the close? You see it's at the high of the day. And so the only reason that this is a trade I like is because you take what's called a turtle soup. So a turtle soup, let me just draw it with the annotate. So if they're, say this is the entry line right here. A turtle soup means it trades up above this line, right? You're not going to sell it until it trades back down past the line. So if it's a wick, right? A wick travels up through the line, and then as it travels back through, you can sell it. So in this scenario, when you're trading a turtle soup, you're just trading it above this high. You use this level as a stop, and then it doesn't always go to the opposite side of the day, but you could just do your typical scale out or aim for that fair value gap. So like that's kind of crazy. I'll say you even took a little wider stop. I'd say like 40 points, which is fair for NASDAQ. That's small. Right there's a 5-to-1. And like I said, you could aim to fill the fair value gap or even just fulfill structure right here. You can see you get a nice bounce right there. And then it trades lower here. Someone the other day was messaging me about a trail stop too. Trail stops are kind of difficult. I think that you just have to trail stops are difficult to do without like mass like back testing. But as far as getting the most efficient, trail stop based on the market, but if you just follow it, as it trades down, I would say don't let a candle give up more than 50% or right at it. If you're looking at this big drop, I really don't want to see 50% of that candle traded past or really close past. It's not that there hasn't been plenty of times where it hasn't turned around, but You're you're trading probabilities in trading, right? But so that's SMT. It's basically odd man out. One of the levels is misaligned somehow, right? Your structure is not agreeing. Now, like I said, you're going to have to work on this setup because it does form a lot, and um, it's going to take a minute to get used to it first. Yeah. So right here, you can see nothing trades below London during New York. But then here in NASDAQ, you can see we wick right there. So that's where we need to be trading. But that's the problem is you're not really being efficient and you're not really catching a good amount of the trade if you're not pulling it somewhere down in that range, with at least a small stop. But right, that's a 7 to 1. That's fair. But that's you entering there. If you enter up here, or if you wait for a confirmation, now you're not even getting a 1 to 1. So, that's what's difficult about the setup. You have to build trust with it. A 3 to 1, not a 7 to 1. Oh yeah. Well, yeah, that really is the difference. Like, look at this right here. This trade, that take profit, this stop, that's a 3 to 1. If you enter at the line, that's 7 to 1. Now, that might not sound like much over like a short period, but over a long period, over 100 trades, 500 trades, 1,000 trades, that makes a huge impact. Yeah, you're going to get in a couple more trades that are going to be losers, but you're losing such a small amount that it really isn't that big of a deal. You can keep pulling them. And then you can see right here, you get some more. Here'd be a good one. It ended up playing out pretty well, but just to show some of them take time, right here, you see that New York right here on the Dow. We trade under New York. But after this SMT at this time of day, right here, right, let's say like, what's this? 10:15 to 11:30 window, right? Same thing here, 10:15 to 11:30, right? This is on each pair what's going on. So what would this look like? Well, as it trades down, you let it trade down, and then as it pulls up, go long right there, stop below there, and you'd look for your scale outs. Probably look for a 3 to 1, 5 to 1, 10 to 1. What happens? Trades up, looks promising, and then stops you out. So that's a stop out. Then you do the same thing, go long, right there. Again, at the line. Don't wait for the confirmation. Stop goes there. Same thing. And then you have to wait. And that's you know, you got offered a 4 to 1, but if your model is built on a 5 to 1, you don't get to take profit there. Unless you do like some mega sniper like freaking that's SMT inside of SMT. It's running a low, but it's already basically odd man out. But anyway, you have to be pretty ballsy to, for lack of a better word, to hold through all this. That's tough. But look, it paid off. If you'd have wanted that high, you'd have got it and then some. If you were able to hold over the weekend, which wouldn't advise it, It would have worked out well Sunday night. And then Monday, look what happened. Freaking don't. Cool. So, does anyone have any questions about that before we move on to the silver bullet? And yes, you can use it in Euro and GBP as well. Let's see if we can find a quick example. And then I'll move on to the bullet. Get these lines out the way. So everyone's all good on the SMT setup. Yes, I could talk about macros. Okay. I don't really see anything much today. You had a little bit right here where it dipped below. You might have taken a loss there. This one's pretty clean, actually. It's a large stop. You might have to use some. Let's see, our times are off. Yeah, let's see, that's 9. Okay, so it's 10. So 10. Okay. And then the other time should be aligned as well. Okay, yeah, we're all straight now. Yeah, so you can see this actually not SMT there. So I was thinking that was weird. This one would be tough, and you'll see what I'm saying. So right here, you can see we trade above New York. That would but we do trade above New York here. So this is kind of an agreement. So you can take that trade, but technically it's not odd man out. What it is odd man out of is the London high because we didn't trade above the London high here in Euro, but we did in GBP. But I wouldn't take a short here, you know, with a stop all the way up here. Would probably want to end up just taking something like that because I'd already know that I'd want to go short here anyway, right? Even as it's trading above New York. So why not just take a shot at something like that? If you already know that there's something kind of bigger picture going on, kind of like there's bigger picture this happening and then microstructure this happening. So if this goes good, it's more likely to go good over the like I said, the longer term, the overarching bigger thing going on. Yeah, there's a good one. You can see right there it runs above that high. Not by much. And then on the same time here, whoops, can't run it. So again, the short would be here. Stop would be above it. Take profit as a scale or opposite side of the day. 26 to 1. Sweet. Cool. So now let's go over silver bullet, I guess. Let's go over this, see if there were any silver bullets today, and then we'll cover macros real quick. Let's see. Okay. So right here, we have 10 o'clock to 11 o'clock. This is our first silver bullet for the New York session. We can go the London one too. Um, so right here, we got our first silver bullet on the 5 minute. You could also use the 3 minute chart. It's not going to be as accurate, but it's still going to help you get into trades. If you'd have got the 3 minute chart, you actually could have got short here. And that would have been a solid trade. That would have been a 3 minute silver bullet. But like I said, the 5 minute is really going to be the best one. And so we traded through, tapped it, turned around. I probably would have missed this trade because I like to get short at what I call the sweet spot, which is the opposite side of it. So the way that we look at this setup is you could either take a short here. Okay, so let me walk it back. The way that I look at the setup is I want to at least get a 2-to-1. So if I'm entering here, let me turn that magnet off. If I'm entering here, my most logical take profit is going to be that low. So if I enter here, I need to at least get a 2-to-1, right? This number here, my risk reward ratio. So then I don't even have to look at anything else. I just look at, okay, where's the 2-to-1? Right here. So that's what my strategy will allow for the silver bullet if I want to enter there. So that's what that setup would look like. Well, okay, now if you enter at the middle and your take profit is here, 2-to-1 looks like this. Right. And if you're looking back, this one is just a fair value gap, but this one, if you look left, gives you protection at an order block. So it just has a higher probability to play out if you're entering here. And then if you're entering at the sweet spot, which is here, and your take profits there, where does your 2-to-1 line up? Here. Or let's see, right here. So look how much room that gives you. Now, are you going to take the 2-to-1? No. What are you going to do? You're going to shrink this stop. It doesn't need to be all the way up here. We just made this short-term high here. I could drag this down. See how we're correcting it. Now we're getting more out of the trade. Well, if we already rejected off this order block, right? Then, like say if we were up here, then we know our stop could be at that order block. If it's already rejected off of it and leaving it, shouldn't come back. Then we get a 5-to-1, right? Versus this level here, well, you're only in the middle, so you don't even know if this order block has been tested yet. So you can't really move your stop there. You have to leave it somewhere where it's a little bit safer at that 2-to-1. And then this one, obviously, you really have no room to move your stop at all. You know, maybe you could bring it to the 50, but it's just kind of like an array, right? Every part of the setup has an advantage and a disadvantage. And so I want to take the most advantageous position, although I may miss some trades. And I'll still look for scalps and stuff here because look, this is what's happening on the 5 minute, but on the 1 minute, you could still look for a setup. So say it trades into this, you could look for another fair value gap to form on the 1 minute. Look right here in the direction of what you're already doing. So you go short here. And look, where would you go short? The sweet spot right there. Your stop goes above the most recent order block, last up close candle. And your take profit would be the same as your other trade, the low of this level or this one now punches through. But you're kind of piggybacking on top of what's already going on here, but you're still doing it with low risk and getting at least a 2-to-1. We're using trade of 8. Cool. And you can see, I mean, there's a lot of ways to piece the thing up, but that would have been a opportunity there. And then right here on the 5 minute, it would have been just last second. I don't know if I would have taken this trade because remember, the time has expired. So these gaps can tend to get a little wild. They're always wild, but they can tend to get a little more, uh, you know, tough. But that would have been a nice trade either way. And then you can see it did have a lot of respect for a while. So now let's talk about the PM Silver Bullet. So 1400 to 1500 on the 5 minute. Nothing here. And then boom, you get a fair value gap here. It trades to it. Where would you go long? At the sweet spot, the opposite side of it. Where would your stop go? Well, where's your take profit? You got to look at the high. The high was here. So that means your take profit's got to go there. Okay, well, where's your 2-to-1? It's got to go here. So you take the trade. It would have got close maybe and stopped you out. You'd have had to take it again and then trade it through. And you'd have had to be happy with your 2-to-1 because it did not budge. Came back for that stop one more time. But I want you to look at how algorithmic that is. Diving right back into it and look, 50% of this order block down here, they don't touch it. Now let's see here. They tap it, can't close, bodies respected. So they just swept this order block here and then left it. But you would have had to double tap it, but there was a trade in there. Let's see, let's cover one of the pairs in the beginning. Gold. Let's see if there's anything in gold. Any bullets? On New York's jacked here. So we had 10 to 11 EST. Nothing too crazy. We did get a pretty big gap right here. But it didn't really produce much. But same thing. Like I told you, where would I enter? Here. Right. That's where my entry would be. It works out too. Look, there's a big fair value gap right there, and that's at order block. It's usually how it works out. I'll just, you know, it is respected in price. It doesn't mean that you have to take a setup here, but it's just respected in price. But remember, if you do want to take trades down here, that's fine. But what do? We go down to the 1 minute where we can get a little bit better idea of what price is doing. So right here, check that out. We got a silver bullet. So why is it a silver bullet? Well, it's already traded here now. And now it's bouncing. So right there, if you did take this trade on the 1 minute, you go short here. You aim for this previous low. 2-to-1 goes here. Takes it out, runs it. Now we get another one that forms. Luck of the draw. This one would be close. If I was busy and I set a limit, I probably wouldn't have gotten tagged in right there. But what would my setup have looked like? Would look like this. EP would be down there. Right there, 2-to-1. And then this one, if you'd have taken this one here, that one would have lost. But that's kind of pushing it. But yeah, it's a pretty solid strategy. And then let's see, 2 o'clock. That was the first fair value gap to form. Didn't pull back that much. Oh yeah, it did. Your 50% is right there. So really, remember, if we measure the leg that created the fair value gap, we really want to find the area that's less than 50. So really, we'd be looking here for longs. Now, like I said, this one is a little more difficult. We'll just leave the whole fair value gap. Why is that? Because we already know where we want to enter, which is here at that sweet spot, right? The opposite side of the fair value gap. It was a bullish fair value gap. So we're looking at the opposite side for a long. Do we buy this? No. Do we buy this? Yes. Stop goes here ish. Right. Where's that previous high? There. So it really could go here if we want to give it some breathing room. If we left it there, that trade would have won. But it would have been a tough decision because right there as it was closing, you can see, um, it was taking you back to break even. So it's a tough one to swallow, but as long as you can hold that, then you would have had profit. And this would have been a tough one to swallow again if you had to give up, almost all your profits. But then it really like slung up, as you can see over here. Wow. Yeah. Massive rally. So there's always that too. Every now and then you'll catch one of those 20-to-1s. What times do you see the most success using the silver bullet? I mean, I wouldn't say just like a specific time, there. I would say the one in the morning is a little more difficult. Some days it could be really tricky because it gets really choppy. Um, and you have to learn how to navigate around all that choppiness. And you really have to just be kind of like I said about entering at that line earlier, where you just have to be sure about what you're doing. How many trades would you say you've taken on the live calls over the last couple of weeks? Well, I would say no more than 4 a day. So no more than 20 a week. I would say that's fair for scalping. Or as far as silver bullets, I would say maybe maybe three a week, three silver bullets a week. I would say that those out of those three though, that those are probably those are the ones that really run. Is what I mean. You know, I'm talking about ones like I would consider this one. It say that this was a silver bullet and it did something like this, like ran here and then ran to the, almost the low of the day or something. I would consider that a pretty successful silver bullet. And sometimes you just miss them too. But that's the like I said, it's like anything. And you just have to get used to the strategy and practice it. I would say it's like the main strategy that we use to on the live calls. It's probably one of the main things we look at. Cool, cool. Any questions? Anyone have any questions? Oh, macros. So macros are the way that I understand them is they are drivers of liquidity. So a macro's job is to seek liquidity. So if we go to beginning of New York, all a macro is, if we cut it in half, see how it's going to give us an even number, 8 o'clock. So it's 10. Let me make it a little darker. It's just 10 minutes before 8 o'clock and 10 minutes after. And that's for every hour. So this is 9 o'clock, 10 minutes before, 10 minutes after. And so this helps us with um, finding moves because the anatomy of a candle is generally open, high, low, close. So it's helping us get the beginning of what that hourly candle is looking like to try to capture the rest of it until the next macro kind of shows us what's likely to happen. And you can build strategies around them, but I really just think they're kind of like hot zones to trade. Obviously, price is going to move in the middle, just as smooth. But I do feel like a lot of setups work out when you look around these levels. Like yeah, it runs right there. This setup here, even inside the macro, you can see right there if you just traded that, trade it right up toward it, give you a nice trade, right? What makes this one different than this fair value gap, right? Well, this one's in a macro. And so it's more likely to have something to do with seeking liquidity. So like same thing here, right? This is kind of what I was talking about. It gets right below this liquidity level, or right above it, but right next to it. And then look, the macro, it trades up. And then right there, almost at 10 o'clock, we make that high. And then it drives down, grabs that liquidity, pulls up, dives lower. We run into the next macro here. But you can see how this macro kind of started another chain reaction of pushes down. One, two, three. And then it pauses. We get another macro. Look, the macro runs this high. We have a higher time frame fair value gap here. Macro runs a high, and then look, dumps off. Starts that next chain reaction for another what? Liquidity run. Same thing here. New macro runs into a volume imbalance. Look how heavy it dives. And then inside that same macro, kind of like we saw here, just a reversal now. Runs that low and reverses immediately. Now run to the next macro here. And so just kind of looking for liquidity around these areas is helpful, right? And looking for trades around them. I don't know. I feel like they're kind of like just a cool addition. And like I said, you can build strategies around them, but they do have small margins, so they're tough. So you have to figure out a way to create, if you want to trade a strategy around the macro, you have to find a way to create large risk reward for yourself to be able to trade it. Dang, that was a nice move there. But yeah, that's really what I use macros for. There's this cool indicator. Luxago has one too, but I like this one here. It's ICT macros by Cog NYTO Nito. But like I said, that's gonna be it for me. Does anyone have any questions before we head out? No problem. All right, y'all. You have a good night. Talk to you soon.